Welcome to MMK FX Group. In today's video, we will show you how you can project, anticipate, and trade in line with market makers. Sit back and relax as Mr. Simon empowers you with knowledge.
Hi guys, welcome back. We're back with another video, and in today's video we're going to talk about how you can project, anticipate, and trade in line with market makers. Now, for most people who might be new to trading, I know this term market makers might be new to you. If you need more information on that and more understanding, do check out our previous videos. All right guys, now as you see, as you've seen on the anticipation and projection that I shared with you guys at the beginning of the video, right, I'm going to explain to you the reason why I had that anticipation, and this was also shared in our Telegram channel. If you haven't joined that, do find the link in the description below. All right guys, so for those people who have been following me for a while now, you would have an understanding that I really like understanding my higher time frame, but I do not like complicating it. Right, so at the moment where I saw this trade, the market was around this area, and one thing that I'd already picked up, this is now in your daily time frame, right? One thing that I'd picked up was we had a demand area at this area, or an order block. All right, and one thing also that is clear to see is we had a break of market structure. Right, so understanding where the market is coming from, where the market is going, is very important. Right, do not just trade blindly. Okay, so as you can see, if we look back a bit, we can also see that price is coming from a demand area. All right, so price is coming from the demand area. Price moved up, broke structure, and we have got an order block which is responsible for the break of this structure. All right, so that is where we had that idea from. Now this is just from a clean chart, right? I know many struggle with combining this, but I do not recommend that you confuse yourself. This is for somebody who really has a good understanding on BTMM and SMC. So just by looking at this from a clean chart, it is very clear to see what we can anticipate. Right, as the market is moving up, this was the area where we would be watching, all right, to continue going up with this pair, as the market structure was very clear to see. And if we also looked on the left side, we could also identify this major imbalance that we had right here. All right, so very interesting. Now I'm going to take this to the BTMM view. All right, now this anticipation was at this area, and I'm going to explain the reason behind that. Now, I always start from your higher time frame, right? I want to understand what my higher time frame is showing me, and on this one, it was very simple. As I said, when I anticipated this, the market was round about this area, right? And already from that demand area, the price came from, which is right here. Right, we can see that we had a block of that peak formation. Right, this 1350 crossover tells us that this peak formation has been locked. All right, remember, we are trading the market maker cycle. All right, so if a peak has been locked, for those who have been watching, you know what to do next. Right, so as you can see, if we go to the H4 time frame, this is what we had. All right, if we go to H1, right, I anticipated that this was going to drop from this area. All right, so now I'm going to explain the reason behind that anticipation. So let's go get back a bit so you can understand where this idea came from. We can identify a peak formation right here, right, and we can also identify a grab of stops below this low right here. Remember, this is your H1. If you go to the H4, it will make more sense. All right, so stops were grabbed, but at the same time, if you look to the left, we had a nice order block at that area, as you can see, right, which helps us confirm the peak formation. Fine. So when we had that peak formation, what we can also see is we had nothing crazy, but we had a day of rise into a consolidation. The dealer ended the day into a consolidation, 1 day of rise. He also gave us another day of rise. He also gave us another day of rise, and within this day of rise, we can identify small pushes push 1, push 2. This is more visible in your smaller time frames. And then we also had the last push, and then the dealer ended the day, right, in a range or consolidation. All right, so that's our level 2. And then we had the next day of rise, right, leading us into the level 3. As you can see, a nice peak formation that we had right there. And then from that peak formation, we can also identify a reset that occurred. Right, so we had a reset. Remember, the market maker cycle is a 3-level cycle, 3-day cycle, 3-week cycle, 3-month cycle, 3 years cycle. But you need to be very selective as you filter out your pairs. Fine. So as you can see from this area, we had a reset, right, which I could clearly identify. Fine. Right, this is still in the H1. Right, so from that area, we can see a peak formation, right, on that reset. All right, that's a peak reset, 1 level of rise, nothing crazy, right, nothing really crazy. And then we had another day of rise, small moves, right, and then we had the last day of rise. That's 3 levels up. All right, as you can see, this happened on Thursday, Friday, and then this was on Monday. Remember, the whole idea of the market maker is to induce. Now, for those people who understand the market maker cycle would know that at the end of the week, right, these trap moves are issued beginning of the week and end of the week. And the dealer's job is to induce traders to go the other direction, hit their stops, and eventually blow your account, right? And that will be a very generous donation to the broker, right? So what can we see here? On Mondays, this is when we can expect the false move week beginning, right? We had a false move week beginning, as you can see, right? A move up. For most traders will be going long, right? And in this case, if we look to the left, we had a resistance level there. Once that candle was above that area or broke out, there's people who trade with buy stops. This is what happened. Right after that, right, we also anticipate a midweek reversal around Wednesday, Thursday. This doesn't mean this will always happen every day, right? But now with the trained eye, right, it will become easier and faster for you to actually identify these moves. So when I anticipated this, right, I identified the false move week beginning. We had a peak, and then I had identified a second leg playing out, right? And that is the reason why I wanted to go short here. And as you can see, that midweek reversal in this case, right, that midweek reversal happened on a Wednesday, right? And as you can see, we then also had a reversal the same week on a Friday, right? So for this one, I didn't really go I didn't hold for much, because remember, at the end of the day, I understood that the market structure, price is coming back definitely to fill those orders right there, right, at that order block, right? So I was not planning to hold this forever, right? And this is where a lot of people struggle, because they will hold that trade thinking, I'm gonna be rich, I'm gonna buy a Lamborghini next week. And if you've been in the market for a while, that doesn't always happen, right? That doesn't always happen. So fine, I understood that. So I didn't really take much on this. I took 100 pips, right? And I was out. I was out in this one, and I waited for the reversal, right? I waited for the reversal in this one. This was also shared in our Telegram channel. If you haven't joined that, find the link in the description below. And please note that this is our only Telegram channel, and you can only join it by clicking the link in the description below. Any other Telegram channel that you come across is not owned by us, so be careful, people. All right, so as you can see, after that, right, just by understanding your higher time frame, it was clear to see. Remember, I spoke about the lock of the peak, which is this 1350 crossover, right? So as you can see, we've got a 5200 crossover right here. I was anticipating a reset, right? I was anticipating a safety trade, rather, for those people. People can call this very different names, but it's all the same thing if you have the right understanding. All right, so as you can see, price pushed back to that area, right? And as you can see, price has been moving up, right? So another thing that you can actually use for confirmation all right, is this. I want you to take notes. This is a tip, right, that you can use to actually improve your trading, right, by using TDI. So when this reset occurred, I want you to see how price interacted or was near this extreme level on TDI. This dotted green line, that's your extreme level, and usually this is where we have peaks. Right, this is where we have peaks. We can also identify when we had this pullback right here, we had price at our top extreme level, which is this dotted pink line right here, right? And we can see how price reversed at that extreme level right there. So right here, when I was looking at this anticipation, I'd already seen that the market has already touched that extreme level, which happened on the Monday, right? The day we had the false move week beginning, right? So already RSI was back in the bands, right, below the market baseline, and this was a pullback to the market baseline, which was our second leg on the chart, as you can see, right? So taking this trade, you could take it with all the confidence you have, because we also had a nice pattern on that market baseline, which is this yellow thick line right there, right? So this reset here, confluence, right? Remember, if we look at this from a clean chart, if we look at it from H4 or even H1, right, when this reset occurred, right, confluence was price is coming back to the demand, right? We could also see, we also identified a build up of liquidity. As you can see, a lot of stops below that area, and that was cleared as price went back to fill those orders at this order block, right, at this order block after breaking structure, right? So what we can see is when this happened on that 800 EMA, price was also interacting with this lower level, which is our extreme level on our TDI, right? So understanding your levels is very important, and understanding the count, understanding the structure is of great importance, right? Very, very, very important, and it will help you be in line, with the right, direction, right? So, as I always say, I'm not a huge fan of retail trading methods and all that, because for somebody, right, they would have drawn a trend line right here, right? I mean, this is the first level, right? First level right there. This is your second touch, right? Can't believe I used to do this, guys. Crazy. This is your second touch, and what are you taught in those retail trading books? You sell on the third touch, right? And these retail trading books also teach you about fake outs, right? That if there is no reversal candle, I mean, look at that. You had a lot of reversal candles there. A lot of people would have went short right there, right? And some people are taught that sometimes you might have a fake out above the trend line, and then price falls back in the trend line, and there you had candle close below the trend line. And guess what? They all know that most people tried selling here, their stops were hit. Most people will think, let me give this another try, might be a fake out, as your retail trading books teach, all right? And most people got their stops above this level, and guess what? The dealer did store around that area, stops were hit, and then guess what? He was out of there, right? So I'm not a fan of retail trading strategies. The best thing is to trade in line with the market maker through the market maker cycle. So we had a reset right at this area on the 800 EMA. We had a nice day of rise. This is level 1 for me, level 1 into a consolidation. We had a nice flow of price right into another consolidation, and then we had the last push right here. So for those people who struggle with entry and exit points, if you do take a trade at a peak, right, and you're looking at your H1 time frame, you can hold the trade for 3 days or more, depending on how the dealer variates the theme, because it will not always be a day of rise today, tomorrow another day of rise. It could be a day of rise today, and it'll take 3 days just consolidating. Right, so you need to be very careful with that. This will help you to hold with confidence and definitely enter with confidence. Of course, there's a lot of other elements that we look at all right, which we go deeper in our course. But I'm not here to sell you any course. I'm just here to share knowledge. Okay, so as you can see, this went up, and this is all through just by understanding your level counts and market structure. All right, now when we go to our M15 time frame, which is our entry time frame, right, this will now help you, actually see these setups well. Right, for those people who understand BTMM, they would know that's a setup. That's another setup right there. So you had two opportunities to jump in if you missed the peak. Right, you had two opportunities to jump in. For me, there was no setup on this day. Right, there was no setup on this day, and I am very selective like that. So what do you think is going to happen here? Remember, the market structure is very, very important. All right, the market structure is very important. All right, guys, thank you for watching. I actually want you guys to comment in the comment section and tell me what you think will happen at this point right now. All right, with what I've just taught you. If you're new here, don't forget to hit the subscribe button, leave a comment, leave a like for the YouTube algorithm, and definitely interact with us. Find the link in the description below and join our Telegram channel for free signals weekly, free setups, and more educational content.